Hello, everybody. Hang on a second. I gotta tweak something here. Yes, it's IA. No, hang on. There you go. Wrong camera. It's IA engine time. Start your engines, as they say. Everything, hopefully, is working. Let's jump in. This is an interesting one today. There's some things happening that are happening very fast, and people have a really hard time wrapping their heads around it. So I'm going to share a scary statistic, and those that don't like what's coming will not like this, but my job is just to share data, like it or not. 7 years from now, 80% of all cars sold will be battery electric vehicles. Okay, 80%. Right now, it's a fraction of that. And that's what's going to happen. It's going to happen fast, and the adoption is blowing my mind. Every single monthly report I see, the S-curve is going more vertical than we ever believed before. And there's only two car makers that matter in this whole realm. That's BYD and Tesla. And there was so much media over the last couple of weeks that everybody's saying, oh, BYD is coming, BYD is bigger, better, etc. It's going to kill Tesla. And we're going to examine that today because we need to. And it's very important to know exactly where the puck is going to be. And despite all this happening, you've got legacy car makers futzing over stuff. You've got General Motors developing a new V8 engine. 80% of all cars in 7 years will be battery electric vehicles. I mean, the stupidity is ridiculous. Anyway, I'm not here to throw stones at an ICE maker. They're just going to go out of business. They're going to die fast, and they're going to die faster than you think. And also, if you're thinking about buying an ICE vehicle, buy a secondhand one because they're going to amortize very fast as well over the next 7 years. So it'll be a serious melting ice cube. So let's jump in now. This is financial advice. And if you want to get smarter, amplify. You get the most knowledge per minute here than anywhere else on the internet. And nobody does the work that we do when it comes to analyzing assets, whether it's crypto or disruptive stocks. That's it. Patreon poll voted for this. Top of the list. Some very interesting ones, actually. In second place was Amazon versus Google. We also had one. It was Boston Dynamics versus Optimus. And a lot of really cool stuff, so it gives us ideas for the future. And the face-off playlist, remember, we've broken out playlists for every single interest, whether it's macro or real estate or Tesla or crypto or layer ones, whatever. You can find all the playlists, so subscribe to whatever you like. Now today, we'll be comparing these two. BYD, the CEO is Wang Chuanfu versus Elon Musk. And there are some very interesting developments. So quick high level. BYD make a whole bunch of stuff, automotive. They also make things like buses. They've been around since 1995. They're based in Shenzhen. The CEO, as I mentioned, is Wang. Revenue is 76 billion versus Tesla 94 billion. Tesla has more revenue despite the BYD company making a lot more cars. Market cap 90.5 billion versus 840 billion. So the market cap for Tesla is a lot bigger. And again, they make gas cars, they make hybrid cars, they make electric vehicles, they make buses, etc. Whereas Tesla do electric vehicles, self-driving cars, solar panels, energy storage systems, that type of stuff. Target markets. I wouldn't call BYD global because the US has certain restrictions that prevent BYD from selling in the US because they're protecting the domestic industry. That I don't think is a good thing. But if they didn't, BYD would be very pronounced in the country, I'd imagine right now. Also, Tesla are global and a lot of other stuff, technology, etc. We'll go through all the different detail. Now, what triggered this whole story, what got everybody alerted in the community was, oh my God, look at this. The catalyst is in Q3 2023, 435 battery electric vehicles, or EVs, I should say, from Tesla, and BYD, 431,000, and they're catching fast. And the mainstream media was having a field day that the Chinese will beat Tesla because they were so excited because they all hate Tesla, not only because he have X, but also because Tesla doesn't pay for advertising. And here you can see the numbers. And we'll look at a whole bunch of numbers today as well. But that's what triggered this. Another view of the development and the speed at which BYD is catching up is quite staggering. Again, this is Tesla versus BYD, pure EV sales comparison. 435 for Tesla, 431 for BYD. Another view as well is this. This is kind of the breakdown of how big BYD is. So BYD have 8 hybrid models, electric vehicle models, whereas Tesla only have kind of 2 that really matter in this top 20 globally. Of course, Tesla also has the Model X and the Model S, but they don't make anything like the numbers these other brands do. CNBS also says BYD have more colors, which is very important to CNBS because that's important as colors. And EVs account for 18% of total automobile market share today. But if you look at BYD being number 2 on this list with their model, which is called a Song, most of them, 80-90% of them, are actually high plug-in hybrids, which means it's a petrol car, gasoline car with a little battery inside of it. Not a real thing. But the key thing there is that 18%, that's nearly a fifth. Next 7 years, that 18 will go to 80. And that's what people need to be ready for. This is why it's a huge opportunity. But Tesla's much more than that. So we'll talk about that too as well. Now, BYD versus Tesla, yet another view. This is the amount of vehicles that they sell. And you can see BYD do nearly 800,000 cars a quarter versus Tesla do about 435,000 cars a quarter. So they do a lot more. But the real issue is they have some cars that are selling for about $12,000, $10,000. So the price point, the ASP, average selling price, is a lot lower than Tesla on average, which is about $44,000. Which is, 4x more. Now, let's look at those average ASPs. The ASP per vehicle for Tesla right now, as of March 2023, globally is 44,000. BYD is 24,000, and the delta is 83%. That means BYD is 83% cheaper than Tesla. The profit per vehicle, very important here. Tesla make on average $6,100 per car. BYD make $1,170 per car, and that difference is 421%. They make a lot more profit per vehicle, and that's even taking into account the price cuts and huge investments that are being made by Tesla. These margins were a lot higher not too long ago. So time for what we call the math engine time. We're going to look at a ton of numbers, and then at the end, I'll analyze and crunch them all together for you. So first of all, this is BYD growth out through beginning of 2026. And you can see the revenue growth is very strong, but the earnings growth is not that strong. When we compare that to Tesla, you can see the revenue growth is going up vertical, and the profit growth they expect to grow a lot more, up to about $10 a share. This is the EPS range for BYD, and the average range is about 15 won. That's about $2.02. And that means at a current price of BYD, that would mean if the price remains the same and they're making $2 profit per share in 2026, that would mean a PE of 31. Remember that number, PE of 31, not bad for such good revenue growth. Let's look at where Tesla is. Again, Tesla is higher. They expect somewhere, up to $10. I think the actual earnings per share will be higher than that because none of the analysts take into account all of the other revenue lines that are out there right now, like the bots, the FSD revenue, the Megapack, energy storage stuff, even Dojo. That's not taken into account here. So we'll go with the $10 range. If we look at the price today, we take the current stock price of Tesla and we check it live. It is $260. Divide that by 10, that's a PE of 26. So from this perspective, out to 2026, the PE of Tesla is lower than that of BYD. So little win there. Let's look at, again, a quick reminder of where Tesla's going and where the money will come from. Bots and robotaxis will be absolutely huge. I've made many videos on this. We'll talk about one of them later because I made a video called 8 ways to $8,000 per share for Tesla. I need to change it to 9 ways. We'll find out what that 9th way is in a minute too. Let's look at valuation charts. This is the GF, the Guru Focus valuation chart. And you can see BYD wins this 92 out of 100 versus Tesla 84 out of 100. You can see BYD is very strong on growth. And this is where I get bogged down because the data that Guru Focus has must be wrong because the growth is higher for Tesla. Financial strength, Tesla have less debt. Therefore, I'd say the financial strength is stronger. So they're correct there. Momentum, yes, Tesla have more momentum. GF value, yes, Tesla has more GF value. And profitability, less. And BYD have more profitability. So for the first time ever, the Guru Focus data is wrong from their valuation chart. So surprising. Anyway, if they're watching, come talk to me. Let's look at revenue and net income. This data is correct because I checked it in multiple sources. Revenue is blue, but look at where that blue arrow is, with the red arrow pointing down. They had a big revenue miss in Q2 2023. Not sure why, didn't dig too much into it. And of course, we expect a little bit of a slow revenue growth in Q3 for Tesla as well going forward, because they shut down factories and they release new models, and that also takes an effect. But what Tesla do is they take what is already world-class, market-leading, and they scrap it and they do something better. They're continually evolving, and that is like no other company on earth. BYD Financials, you can see here what they did in Q2 or Q1 2023. They paid back a lot of debt, and that shows you the free cash flow taking a big dip here. When we look at the Tesla financials, steady Eddie, except Tesla pay a lot more stock-based compensation compared to BYD that don't. They just focus on salaries. But the net income is a lot more as well for Tesla. Let's look at cash to debt, especially with high interest rate environments. You can see here how the debt actually came down for BYD, and that was reflected in the cash flow. And then for Tesla, it's very low. So they're both kind of equivalent when it comes to debt. I think BYD has about 4 billion. Tesla have about 5 billion, which is nothing considering the market cap. But Tesla does have a lot more cash as a percentage of market cap. And they're now earning over 5% on that back bucket of cash, which is approaching $23 billion, which is also good. Let's look at the breakdown of where the income comes from and how strong or thin the margins are. Here you can see the revenue stuff, and you can see that a big chunk of revenue actually comes from cell phones. They sell mobile handsets, and then the rest is automobile with some other crumbs. But when you look at the net income, their net income is about 3.9% of revenue, which is very small, especially considering they do mobile handsets. I'd love to see the breakdown between those two different revenue lines, because typically, if you look at the profit that Apple makes on a handset, it's 60 to 70%. So I'm sure these guys could be the same. If that's true, that means, considering the amount of revenue, they may even be making no money at all on their cars. Let's look at Tesla for comparison, who don't make mobile handsets. They're making 15.4% of their sales and profit. They're making far more than that. And you can see that the energy generation and storage is tiny, 4.8%. I see this going to 12 to 13% over the next 2 to 4 quarters. Energy storage is growing very fast, and nobody has their eye on it, and it's very profitable as well. Don't forget as well, we have a Substack for every video we do, every slide, all the write-ups. If you don't have time to watch the videos, you can read these in 5 to 7 minutes and pull out all the alpha you need. And let's jump into the conclusion already. This is where the numbers get kind of hot and heavy, and I saw something that I've never ever seen before, so I told you there'd be a surprise. First of all, face off from Market Info. This is BYD. You can see here, I like to look at revenue over market cap. It tells you how rich the company is valued. And there, BYD win. Also, the price to earnings ratio is 26.43 currently versus 74 for Tesla. BYD win that as well. And the earnings per share, of course, because the price is lower, they win that too. So from that perspective, BYD are ahead. Let's look at what I call the 30,000-foot ratios. These are operating margins, net profit margins, return on equity. Tesla wins all of those. The liquidity ratio, the quick ratio, BYD wins, so it's 0.4 versus 1.1. And debt to equity, interest coverage, and EBITDA growth, Tesla win. So they win 86% of these 7 different key ratios here. But it all changes right now, or in a second. This changes too. So analyst update as well. BYD wins. The analyst target for BYD is $75. That's a 21.2% upside. And the analyst targets for Tesla are only $237. That means if the analysts are right, Tesla should drop 10% down to $9 and down 9.5%. But there's a catch, all right? Because we have Gordon Johnson, whose dear father is the GM for, or what was his position? I can't remember. Anyway, the senior executive, vice president of operational excellence at General Motors for a long time. So Gordon Johnson is very pro GM, and that's why he has a $24 price target on Tesla. And this skews the whole analyst targets as well. So remember, I'm just sharing information that's publicly available, and that $24 takes down the average a lot. If you pull that out, the analyst price target would be higher than the current price today. But again, also remember, analysts don't know how to measure disruption. They think it's a car company, which is not. Anyway, let's look at this one too. Here we got my target. I believe BYD could hit $100 from where it is now at about $60, and that's a 61.6% upside. Whereas Tesla, my target is $450. That's in 2025. I think Tesla could easily reach 350 to 400 in the next 3 quarters, but that's a 71.84% upside. So again, from my perspective, based on my pricing models, I think Tesla will win there. Now, this is the detailed ratios, and I've never seen this before. Every single one, BYD wins. You can see the PE ratio, forward PE ratio, EV to free cash flow, EV to EBITDA, you name it, price to tangible book, boom, 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 all across the board. BYD wins 100%, and I've never seen that happen. So smashing it there. Did tell you this is a surprise. Let's look at historic performance. This is a 5-year chart. The top line is Tesla. The bottom line is BYD. And you can see here, Tesla's up 1,420% over the last 5 years, and BYD is up 384% over the last 5 years. Both have done very well. Both will continue to do well, especially during this EV revolution. Both are the leaders in this space. But there's some more twists coming too. Let's look at our ATR model, and this is what we're building right now as we speak. Our latest model is the Augmented Trading Range, and the vision was to identify when things are dead, when things are cheap, when things have upside, or when things are getting frothy, i.e. there's not much upside left. And right now you can see here that BYD is knocking on the door of level 5, which means, and it has a zombie coefficient of 97.44, which is extremely good. It means it's not dead, it's very much alive. But it's also very toppy. If we compare this to Tesla, it's only at level 4, and the zombie coefficient is about 10.4. So it has potentially much more upside from the ATR model. One of the key things we look at now. Although these things are supposed to be only financially based, when you're looking at disruption, you have to look a little bit beyond the actual ratios. So one of the key things is BYD gave up an FSD, saying it's impossible. They argue that their self-driving tech is basically impossible, and ignores Tesla FSD. Now, is FSD possible? I have it. I've been a beta user for a long time. Yes, it is. It's, I don't know if you want to say 96% there, 97% there. The edge cases still need to be solved for, and Elon Musk believes they're getting very close with the new version, FSD 12, which is trained from video only, no code, which is mind-blowing. So FSD is possible. Also, some other comments from the CEO, Wang Chuanfu, on automation. He said these things. First of all, he said autonomous driving is 10,000 times more difficult than production line automation. And the BYD CEO is on record attributing that increase in headcount directly to the car factories he ramped and built. The BYD employee count went from 300,000 to 631,000 just in 2 years. 2 or 3 years. And he's also on video saying that he wishes he had the kind of automation and manufacturing process that Tesla has. And right now, they need employees to hammer all their cars together at scale. Tesla have 127,000 employees, despite doing a lot more revenue, and BYD have 631,000 employees. So I ran a new ratio. It's basically revenue per employee, real simple. Revenue 76 billion for BYD, employees 632,000. That's 120,000 revenue per employee. Tesla 94 billion in revenue, 127,000 employees, and that's 740,000 in revenue. But remember as well, their employees work in many different areas like FSD, energy storage. They're opening up a lithium refinery and so many other businesses too. Bots. It's not just car production. And then within the employee count here of employees, I couldn't find out how many people make cell phones for the company, but we'll see. Now, getting back to this, and a shout out to Dave Lee, this is the S-curves colliding. You know, what makes Tesla a little bit different is they have the FSD, robotaxi, energy, and the AI robots. We're in the middle of the EVS curve right now, going vertical, but these other ones are coming. Energy is coming. FSD is coming. It's just a question of when, how many quarters, and there's not going to be very many quarters. Maybe Elon did say end of Q4 this year, but probably will leak into sometime next year. Either way, it'll be amazing. And then the Optimus progress is stunning. Now, getting back to my old video from March, seems like a year ago, March 2020, when the price of Tesla was really cheap, when we were throwing the kitchen sink at it, I made this video, 8 ways to 8,000 share price. And you can see here, vehicles only makes up $1,500 of the future share price per my analysis. $500 comes from the semi, and then a van, a tiny amount, robotaxi, a big chunk, Megapack, a lot. In fact, Elon said multiple times the energy storage business will be bigger than the car business. Insurance, peanuts, solar pump, heat pump, nothing. Bots, huge. So that's over $2,200 of my price target. But there's news. Even though Wang says FSD is impossible, Morgan Stanley came out and talked about FSD and the catalyst. The V12 FSD woke them up, and Morgan Stanley have been very wrong about Tesla for a long time, but now they're waking up. And they spoke about Dojo. It's a purpose-built supercomputer to train FSD. And they believe it'll add $500 billion of market cap through faster adoption of robotaxi and SaaS, and they'll be renting out that capacity just like Amazon do with Amazon Web Services. So that's a big, big delta as well. So before we get to the summary right now, I want to make sure you guys all understand these things that BYD does not have, which actually skews some of the data. So let's look at the face-off comparison of all the different ratios so far. When it comes to historic performance, profitability, growth, financial strength, cash, debt, profit per car, ASP per car, cash to debt, and FSD, Tesla win. The next three, revenue over market cap, PE ratio, and guru focus valuation, which I know is broken, BYD win, but I just shared the data. And then PE for 2026, Tesla wins, 30,000 foot ratio, Tesla wins, analyst targets, of course, thank you to Gordon Johnson, BYD wins, IA targets, Tesla wins, detailed ratios, BYD smashed it out of the park, IATA, based on the ATR model, Tesla wins because it has more upside, and 2032 target, Tesla as well wins too. So of these, 5 go to BYD, 15 go to Tesla, and the winner is Tesla. I know many of you are probably surprised, but it is the equity of the next 7 to 8 years. And as I've been urging everybody since the start of the channel, it's not just about Bitcoin, which is also an asymmetric bet. This is the other side of that coin too. So thank you all for watching. I hope you enjoyed the show. Big thank you to everybody on Patreon for making me do this. I do what you guys want. So appreciate it all. And thank you to the mods in the chat too. Have a great day, everybody. Tomorrow's Thursday. Today was a good day actually for some stocks too. Kind of very surprising. Very strong. So we're still in October for equities. Still okay for crypto. But we'll make it through. Thanks everybody. See you later.